So in this video, we're going to be going over my M1 Finance portfolio, which is dubbed the passive income portfolio. It's a little bit different from my Robinhood portfolio. My Robinhood portfolio is a little bit more of YOLO style, more of like, well, not really YOLO because I have some serious companies in there as well. But generally my M1 Finance portfolio is where when I get into it, I'm going to get serious and I'm taking very serious looks at the companies in it. So if you want to see how I've built this portfolio up to be about $3,400, stick around and let's get right into it. All right. Whoosh. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we're talking about on this video, hit that like button. Turn that thing, say it with me now. But anyway, in this video, like I said at the beginning of this video, how many times will I say this video and back to back to back to back to back to, anyway, let me stop. But yeah, we're gonna be taking a look at my M1 Finance portfolio, which you can look at right about now on the computer. And basically this is my M1 Finance portfolio that I've been building up for a little bit. Actually, I started this portfolio in May of last year. I think most people invested May of last year. I put $100 in just to try it out. And I was like, you know what? I really like this platform. I'm gonna keep investing. And that's what I did. And since then I've grown it from $100 to $3,400. Most of that is money that I've put in. About $3,000 of that is money I've put in since then. And it has grown by $445 in that time. Now this return right here is market weighted. In actual returns, if I go into my holdings up here, I've only had about a 14% return, which is not amazing considering that a lot of people last year had like 50% returns, 100% returns, 15,000% returns. But you have to also consider this. I was dollar cost average in the entirety of last year. I was always buying stocks. Even when they were going up, I was still buying stocks because I didn't have $10,000 that I could just invest at the bottom of the market. So like I like to say to anyone, if you're just getting started investing, don't worry about all the noise, about all this stuff. Just start. Just do dollar cost averaging into companies that you believe in and companies that you think will be around for a while. So there is a company that I've added into the portfolio. It's a brand new company. But before we get into that company, I just want to tell you the weighting of my portfolio. As you can see right now, all my weightings are out of whack. One of the things that I love about M1 Finance is the automatic invest feature and the automatic balancing feature that it has. Which if I click this auto invest, what it's going to do is it's going to make sure that my portfolio remains in the balance and the allocations that I have it to. Right now, as you can see, I am very heavy weighted on tech and I want to stay about 50% tech because that's the businesses that I understand the most are in the tech sector. But I also want to be diversified enough in other industry. At the same time, I understand that with $3,400, why am I really being that divested or why am I being that diverse? When I first started out, I wanted to own all the companies. I don't know if you guys saw that first video I ever did. I wanted to own all of the companies. And that's something that I learned later on, that it's better for me to be focused with my investing. And that's what I started doing later on, with just focusing on 3 main companies. And you see them here in a second. But the one beautiful thing that happened last year that I did was I invested in financial services, which was like the luckiest thing that I did. I bought shares of Bank of America and since then it's appreciated pretty nicely. I'm just saying I got super lucky though. Like if you look at any of my earnings and you're like, wow, this dude really knows how to pick. No. I don't really know how to pick stocks. I got lucky. Everyone who picked stocks last year, you basically got lucky. Let's just be honest. If you haven't been doing stocks for a long time, you got lucky because it was like shooting fish in a barrel last year. And that was the same thing with my portfolio. But anyway, the company that I added was Intel. Intel is the company I've added since the last time that I put it in here. And the main reason I added Intel is very undervalued in my estimate and by my calculations, and just understanding everything that's going on in the world right now. Everyone is looking down on Intel. Last year, they were trading at about $40 something, but I was so focused on building up my positions in Microsoft and Apple that I was just like, I'm gonna leave Intel alone for now and keep buying into Microsoft and Apple. And really, I should have gone ahead and bought into Intel at that point, because since that point in time when Intel was about $40 something, Intel has flown up to $64. And of course, I put some money in there because I still see Intel as extremely undervalued. I think its actual intrinsic price is about $100 a share. So I still have a lot of upside with Intel and very low downside, which is something that I'm learning more and more about when it comes to actually investing. The last time I talked about how I was doing some YOLO plays in my Robinhood account, this is not the same thing in this account. In this account, I'm focused on the fundamentals. I'm very much focused on a margin of safety to ensure that when I do buy into a company, I'm going to get some kind of return on my investment. That's very important when it comes to this account. So that's the one company that I've added. If we look at just overall, with it being called the passive income portfolio, one of the key things of this portfolio is dividends. Over time, since last year, I've earned about $30 in dividends in total. If we go over to my dividend tracking spreadsheet, by the way, if you want to check out this spreadsheet, I'm gonna put a video of how to put it together up here. And if you want the spreadsheet just straight up, there's gonna be a link down there for a Dropbox where you can go get it. So this just basically brings in all my information and I put it into a spreadsheet so I can track how my dividends are doing over time. It's just good to see, put eyes to what it is that you're trying to accomplish. So in this case, as you can see, I started off with 11 cents in dividends. And since then, it's been going up and up and up. I mean, there are months when it's not that high because I only get paid every quarter for some businesses and some businesses pay me monthly. But most of the time, it's going up and up and up. As you can notice, there's a massive jump that I've had up to $6.30 for the shares that I own. I just got paid by Bank of America. I got paid by Realty Income Corp. I got paid by Microsoft, which is my baby. I got paid by Southern Company, Costco, and by Southern Company. Those are the ones that paid me this month. And so every month a business is paying me some kind of dividend. If we go all the way back to November, a business paid me in November, in December, in January, in February, every single month, I'm getting some kind of alert on my phone. They're like, hey, you just got paid some dividends. And it feels so amazing whenever I just get some free dividends in my account for doing basically nothing other than investing my money into businesses that I believe in the long term. And that's what I've been doing as far as my portfolio, is just focusing on those kind of businesses and just continually building this thing out. Eventually, this is going to get to the point, I hope, where I'm getting like $1,000 per month in dividends. Now, that's not going to happen overnight. But then again, I didn't get to $3,000 invested in this account overnight. It takes time. It takes a lot of me just consistently doing it and consistently paying attention and consistently investing. That's the only thing that I've been doing, is just consistently investing. If we compare the amount of dividends that I earned last year in 2020 versus how much I've already earned in 2021, I've already earned $11.59 versus $17.44 in 2020. And that's only going to get higher and higher and higher as I continually do this consistently, as I continue to invest my money, as I continue to find new ways to make some extra money so I can keep investing, which is the main thing. A lot of people forget about that part. Part of it is investing and getting good returns, but you need money to get invested. Like I said earlier, I'm probably never going to be the guy that's going to have like $30,000 to invest. I don't know if YouTube pops off or something happens and I get that kind of money, then yeah, sure. But generally for us mortal folks, it's going to be extra money that I have on the side that I can put into the market and put to work. But generally, that is my entire portfolio. It is called the passive income portfolio because this is truly passive income. I truly don't have to do anything other than invest in good companies over time, and they will pay me good dividends. But anyway, that's all I got for y'all. I hope y'all enjoyed the video. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you enjoyed it or loved it, hit that subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace. Whoosh. Ah!